Hello everybody, this is Pat Walker, Mission Winners, doing a video overview of the ETFs. Why do we look at the ETFs? It's not because we like to look at a ton of different charts, okay? But we do have a limited amount of time and we try to use it wisely. We look at the ETFs to look for either strength, for potential opportunities in ABUY in the ETF, or that industry group that the ETF represents, right? Or it also helps us avoid various areas. Both foundations are really important. What to consider and what to avoid. So let's take a look here and see what we have. Here we go. ARK Revolution here. You can genome. There's nothing here, folks. This is a daily chart. It's falling and it fell on heavy volume. It tells you something. Stay away from the stocks in this group. There you go. The next one, cloud computing, lagging here. There's no real power here. Fell on increasing volume Friday. Do you see this? Stay away from it. Commodity index, lagging here. I mean, there's a bounce here, but look at all the overhead here, folks. This is tough. I'd be cautious with the commodities. Diamonds, it's not so much power right here, as you can see. I mean, the 1+ is a gap down and it closed, okay, in above where it opened, but not a lot of volume. Pretty tough. I'd be cautious there. Electric vehicles, not a lot of power there. Internet, it's a bounce off the 200-day, but overall, not a lot of true strength there. IBD 50 is pretty choppy here. A little bit of support right here on the 50-day, but low volume. It's overall kind of rough with a downward bias. Be careful there. MAXLIST, this one focuses on the MAXLIST stocks. This one had a decent close Friday, as you can see, all right, and potential, but it's overall pretty choppy here, all right? Not a lot of power there. What does this say? This is China. What does it tell you? Stay away from the Chinese stocks. That's it. Gold miners. There's no power in gold right there. Or gold. Gold miners are gold mines. Look at this, gold. Stay away from it. Fell on increasing volume. It's below the moving averages. There's power in knowing what to look for, but there's also power in knowing what to stay away from. We narrow our universe down for the best of the best. Biotech. No, I think they need I think biotech needs some drugs or something. Look at that. Okay, that's dad humor for you. There you go. Nothing good there. Oil, it's kind of choppy here, okay? I'd be cautious with this. I mean, it's a higher low, but there's a ton of overhead supply. Yes, it had decent volume, but it's pretty darn rough, okay? Technology software, it's just choppy. I mean, this was decent here. Okay, there was kind of a cup and a handle and a lift right here, but right now it's pretty loose and choppy. I'd be cautious with software. Continue onwards. Medicine. It's not so good, folks. Not so good. Support on the 200-day, but it closed below where it opened. This is a great lesson for you. See the open? Then it runs up, and this is where it closes. It actually closed below where it opened on an increase in volume. Support maybe on the 200-day, but it's pretty choppy. I'd be careful with the medicine. Here we go. Mid-cap showed a little bit of life here. Okay, you can see that gap down and it closed up a bit. Kind of choppy. 1+ is it did show a little support on the price and a slight volume pickup. Okay, mid-cap. There we go. Aerospace and defense is hanging in. Look at that. I just showed you a bunch of ETFs. You say, gosh, here's one above the rising. This is the 21 EMA. There's one above the moving average. What would you do? You could punch up ITA, look at the top 10 holdings. There could be a candidate there. There you go. Home construction. What do you see on home construction? Well, it fell on heavy volume, decent bars here, and then you go, oh, that's a bad red bar. Look at where it opened and look at where it closed. A lot of people don't even really look this closely at this. We do at Mission Winners. They supported it there. It gapped down, it fell, and closed in the top fourth of its range on a pickup in volume, bouncing off the 50-day. Oh, there's something I maybe look at. So you could say the ETF or maybe a couple of the leading home building stocks. You could take a look at them and see if there's an opportunity. That's why we do this, systemization, okay? And that is ITA, that is the home builder. S&P growth is choppy here. There's nothing too much going on there, okay? IWM, a little bit of support here. Not too bad, but you can see there's some selling in this too. A little choppy. This is not real clean and simple. Err to the side of caution, but it does show more support, a little bit more power than QLD and SSO, which you'll see shortly. Just note this. IWM gapped down and closed in the top fifth of its range on a slight pickup in volume. Remember that, okay? IWM gapped down, fell, and closed in the top fifth of its range. All right, good. Let's move on. Real estate, this is not good. Stay away from it. There's power in knowing that, isn't there? Transports, yeah, a little bit of support on the 50-day. Needs to show some real power. Not too bad. Airlines, maybe a little support on the 50-day, but not great. Regional banks, it's sloppy. You're not going to see these setups in any book saying, this is what to buy. Just telling you that right now. Biotech, another biotech ETF, stay away from biotech. Mid-cap, now this gapped down and fell and closed up a bit. That is a potential, isn't it? Oil services, bouncing here a little bit, as you can see. Right here, gap down, fell, closed up. Oil, maybe something to take a look into or watch. Oil services, oil service stocks. Pharmaceuticals, nothing. Software, pretty choppy, and that's a really thin ETF, okay? I just pointed out to give a proxy for stuff, but it's pretty dang sloppy here. I would be cautious there. QLD needs to take out these highs of this bar, okay? But it's got a downward bias here. It's a little loose. Be cautious with that. QQQ, same situation. Retailing, in 1 second, what does this tell you? Stay away from retail. Done. Silver, in 1 second, stay away from silver stocks. See, there's power in knowing what to buy. There's power in knowing what to stay away from. That's why I do this. Steel, a little bit of support on the 50-day. As you can see, that's not bad. Maybe the ETF, okay, SLX, or maybe some seal stocks. And that's why we do this. That easy. Here we go. Semiconductors, yeah, it's kind of choppy. Here's one plus, though. That was a good up bar right there, folks. So SMH, maybe some semiconductors, or the ETF itself. But again, we need a good market. Know that. Spiders, gap down, fell, closed in the top third of its range, supported the 50-day on a pickup in volume. Maybe this is the start of a turn. Same thing is true. SSO is a little bit weaker, though, isn't it? As you can see. Continue onwards. By the way, we'll go back to it. Here's QLD. QLD, kind of sloppy. It's above the 50-day. Here's SSO. Kind of sloppy, and it's below the 50-day. Which is stronger? QLD is stronger and has been stronger. What have we been involved in? A couple of MAXLIST stocks that have worked. There we go. We go where the money goes. We don't have to forecast it. Solar, sloppy. 20-year treasury, it's a downward bias. There's nothing there. Small cap, another small cap ETF doesn't look too bad like IWM. All right, that's something to take into consideration. Natural gas, but golly, look at all the overhead on this. Okay, nothing really great there. Leave it alone. Uranium, there's nothing great there. Oil, it's a little choppy. Higher low setup, but again, this is lower highs. Higher low, but it's choppy. It's just choppy. Err to the side of caution. Just pointing out what is, not being negative, just pointing it out. Consumer discretionary, support on the 200-day, nothing really great. Aerospace and defense, now look at this. This is basing on the 21-day. There we go. Maybe look at XAR and see if there's a potential opportunity there. That's good. Another biotech, no good. I mean, team, we've seen a couple of biotech ETFs now, and what does it keep telling us? It keeps saying, stay away from biotech. Isn't that great to know? It's great to know what to look at, and it's great to know what to stay away from. I love that. Home builders, that's hanging in there, not too bad. Compared to a lot that I just showed you, home builders doesn't look too bad. Materials, how do you build homes? You need materials. Look at this. See how you connect the dots? This is a materials ETF. Doesn't look too bad, does it? XLB. For what it's worth. Could this push through the 50-day right here on volume? Had good volume Friday. There's a potential entry pushing through the 50-day. I'm not saying it's going to, but it's something to look at. There we go. Communications, nothing really going on with communications. Energy, that's pretty sloppy down there. I'd be cautious with energy. Financials, maybe some support on the 50-day. All right, that's not too bad. And it picked up on a pickup in volume. Okay, XLF, potential candidate. There you go, bouncing off the 50-day. And it tells you something else. Financials aren't acting too bad. Okay, maybe a little bit of a lift. You like financials stacked? Okay. I'm not saying buy it, but just pointing out the bigger picture. Industrials is a little bit choppy. Technology, it's still okay, but it's kind of choppy here. Nothing great there. Continue onward. Consumer staples, there's nothing there. Move on. Healthcare, stay away. Look at this. They need medicine. I'm sorry I had to say it. But look at this. You see the steady trend right here? It's been telling you, stay away from the healthcare stocks. That's all. Makes it easy for us. I love it. Love it. Consumer discretionary, downward bias, stay away from it. Metals and mining, stay away from them. Another energy ETF that doesn't look too bad. Shopping around a little bit. You can see a slight theme with that. There's two of them. I showed you OIH just a little bit ago. Here's another one, but it's not a high probability entry. It's below the moving averages. One plus is it did go up on a pickup in volume. There we go. Easy. Retailing, the consumer's not doing much right now. Be cautious. Software, nothing really great there. And we're back to the top. So now let's take a look at the MAXLIST stocks. Apple, gap down, fell, closed in the look at this, top third of its range for the day on a slight pickup in volume. Nothing really great about it, okay? Maybe it's going to lift. Not a slam dunk, but just err to the side of caution. Amazon, we had Amazon and had a great, from down in here, this was a good run. This is what, we're thankful for things like this. Now, you look at it here, by the way, here's the weekly on Amazon, and look at the volume pickup. That was a trigger to buy more, and we did. And it was a good run, and then, when it drops and you sell into strength, we've been out of it for a while. Potential support may be coming in at the 50-day, but right now it's still resistance. It's a tougher pattern here, okay? Be careful with that. Just have to share that with you. Err to the side of caution. Overall, the big message in this video is going to be this, team. This is for everybody. Be a little cautious here, all right? There's a time to really push it. Things are kind of sloppy. Err to the side of caution. And if the market gets good, it'll stay good and we'll be able to plow into it more. Alibaba, what does this tell you? This is why I do this. In 1 second, it says, this is no good. Look at the trend. Yeah, leave it alone. There's another very telling sign. You see this bar? Look where it opened. It gapped up, ran up, and closed in the bottom third of its range on a big pickup in volume. They were selling on that bar. They were selling. And it fell the next day. You see action like that? That's why I do this. It tells you to stay away. By the way, you see that line right there on the weekly? Corresponds in here. And that we owned this, and this was a good run. Look at the volume pickup on this bar. There you go. We got out. Nothing's going on with it now. Move on. BIDU lifted. But notice this. This is very important. Look how choppy it is. Look at all the gaps. Price gaps indicate high investor emotions. You get caught on the wrong side of a gap, and it can be a real problem. You've got to be really careful with that. So wide range bars like this, it's wide and loose. Be careful with this. Be real careful, all right? I don't like wide and loose bars indicate high investor emotions. You don't like high investor emotions when you're involved with a stock. That'll help you. Google. This is not so good. Look at it's trending down. There's really nothing to do with this at this time. Until it starts showing some life and lifting and preferably pushing above the 50-day, there's nothing going on. Just move on. By the way, there's power in knowing what to do, and there's power in knowing what to avoid. There you go. Goldman Sachs. Basing here a little loose, but have you noticed? A lot of the charts I just showed you had red bars recently. There's 2 green bars on a pickup in volume. Support on the 50-day, perhaps it will lift here, and not that bad of a close on the weekly. Is there a clean and simple entry here? Not really. Okay, that's the unfortunate part. Not a really clean and simple entry, but it is showing a little bit of strength, more so than a lot of other stocks or ETFs. And it closed right, a little bit above its midpoint on the weekly. Continue on. MasterCard. In 1 second, it says don't buy it. That's it. There's nothing to do with it. Leave it alone. Yeah, a little bit of a tail bar. A lot of selling here. Loose. Just be cautious with it. Meta. How does that look to you? I just showed you a bunch of different charts. You said, gosh, this actually don't look too bad here. Support on the rising 21-day. I agree. Perhaps this will start to lift off. Could be a potential candidate. There you go. By the way, look at the weekly. Up on heavy volume. Pulls back on the weekly on steadily decreasing volume. Decreasing volume on the daily. That's constructive. Support on the rising 21 day. There you go. Microsoft. How's Microsoft look? It looks pretty choppy to me. Right in here, there's nothing really to do with it. You gotta wait. Gotta wait. Just let it settle down. Very important. Please don't think that, oh, I've got to be doing something every day. Yes, we do. You know what we need to be doing every day? Practicing good risk control and risk stock management. That's it. Netflix. This is the daily, weekly. We bought Netflix down here. That was the first buy. More here. Ran it up. Sells into strength. When you get a bar like this, these tail bars that gap up and start to, those are bars to sell some. Not all of it, but some of it. Then when it starts to roll over, you sell the rest and take your money and say, I'm happy. Okay? And we're out. Is there anything to do with it now? Not really. No. It needs to show some life and then maybe start a pushback above the 50-day. But at this point in time, there's nothing good. And it closed below where it opened. You see right there? Let's move on. NVDA. I'm thankful for things like this that lift through spots. I'll draw this for you. There. And then there was a lower level spot. Right there. And then it ran. And this is the 8-period exponential moving average. And this was on the key list. And VIPs own it from in here and here. And this is the important lesson. And I'm not bragging here, please. I'm just trying to educate. I was an IBD meetup co-leader for 12 years. This is the stuff we talked about on the stage. Note the trend up the 8-period exponential moving average. Trends pay more than all the decisions that you have to make. Ride trends. Sell some into strength to guarantee profits and release stress, but let it work. Let it run as long as it can. And then it runs up, pulls back here, and we knew that earnings were coming, okay? We knew about the earnings coming, and we said, hey, we got lighter before earnings because we didn't want to have a huge gap down, and we got a gift, and we're still in it from down in here, okay? And it's working. I'm just pointing out, this is, please don't think I'm bragging now. I'm just trying to illustrate what to look for, how to ride trends. Look at the trend up the 8 EMA. That's beautiful. Tesla, first entry down here. There's the base. Look at that, clean some MAXLIST stock. And look at the trend. I've used the word more than a couple times. Look at the trend up the 8 EMA. That's what we want, okay? Let me do something here real quick, hold on. That's up to date now. So here we go. This is where we're at. We just got to watch it and see what it can do. All right. Also, I need to pause here and share something. Yes, remember, we still have some earnings coming out. Be aware of those earnings dates and times, folks. All right. Just giving you a heads up. Trends are paying. It looks fine. Maybe it's going to base here for a while. And then I'll show you something neat. Here's the weekly. And it's maybe forming, maybe, I don't know the future. Okay. But it looks like it could be forming a cup with a handle here on the weekly, right? Here's the cup. Potentially forming a handle. If it lifts out of that cup with handle, that could be a spot for an add-on or a new buy. That's what I'm showing you. It'll tell us what to do. That's what I love. We don't need to know what it's going to do. Price and volume will tell us what to do. There we go. Visa's just choppy. There's nothing really to do with this, okay? I'd leave that alone for right now. And then we take it back up to the top.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.